Barbara is calling from Mount Hope. Go ahead, Barbara, you're on the air.
Good afternoon, gentlemen.
Hi there.
And my question is a general one. If establishing a diversified portfolio, is it better to invest the same amount of money for each stock or same number of stocks in each category? I'll hang up and listen to your answer. Thank you very much.
So diversification.
Right. So Barbara, the way I'll answer that question is, look, if you look at an index often is weighted based on the size of the company. So Intel, as a semiconductor company, would be several times larger as a position in the semiconductor index than a mid-sized semiconductor company. It's hard for private investors to build a portfolio that way, and I'm not sure that it completely makes sense. At Barometer, when we look at a fully invested equity portfolio, it's 20 to 40 securities. It's pretty focused. Mm-hmm. We start with 2.5 or 2% weightings, and a full position for us is 5%. So if we had 20 positions, we would be about 5% weights. And we think that realistically, we're picking companies, we're not picking size. And so I would prefer to build an equal weight portfolio. But then you want to make sure that you get some representation from different types of companies, different industries, different market sizes, and get some diversification concentrated in one spot.
Marie is in Montreal. Go ahead, Marie.
Hello.
Hi there.
I was about to sell my electronic arts yesterday, but then I thought I'd better wait and see what you think, Mr. Burrows.
Good stuff. Okay.
So look, Alex, is it Alex?
No, Marie.
Oh, Marie. I'm sorry, Marie. We really like the video game space. We own Electronic Arts, and we own Take-Two, TTWO. This is a group that's going through a change. Where we think you make money is you find a company or in an industry that's perceived to be good to begin with, but where there's some change that's taken place that allows them to take their business to a whole different level. Okay. And what's happened with the video game business is that it used to be you went and you bought a disc and you put it in your computer, and if you decided to upgrade it 2 years later, the new version, you went to the store and you bought it. Today, you download a game and you're in the heat of a battle, and you say, oh, I'm going to pay $3 for that extra weapon.
Oh, the old in-app
to help me.
Yeah.
Right. So their ability to generate cash from their properties has gone like this.
Is that right?
So the multiple that you pay for that business should expand. So not only are their earnings growing, but the multiple of earnings that people are willing to pay because the businesses are changing for the better, and you can get a geometric lift. And that's what's happening in this whole industry. So our job is always to find industries where there's some structural change that takes place that can allow them to accelerate and take their business to a new level. And the video game business is right in the middle of that.
That's amazing. So, so you're in a battle. You've got orcs coming at you. You think I need to
buy yourself another life. You buy some special gun to get the guy you're playing online somewhere else in the world. And you know, I had a conversation with a friend recently who said one of her kids' friends got a hold of their password and had spent something like $12,000 on additional in-app purchases.
Whoa, yeah.
So that's the dark side of the whole thing. But ultimately, this is an industry that has a quickly accelerating cash flow.
So in this virtual world of the video game,
people will pay in the moment for enhancements.
It's almost like cigarettes. It's an instant gratification.
Yeah, that's right.
That's incredible. That's a great story. Yeah. Alex is in Beaverton. Go ahead, Alex.
Yes, I wonder, does David still own Oclaro, and would he recommend it at this level? Thank you.
Sure. So here's another example of an industry going through a change. The last time we were in a boom for fiber was the late 1990s. And we know they put way too much fiber in the ground. We had too much capacity, and then the whole thing went to sleep. And what's happened is that with the growth and boom in bandwidth use, video, games, Netflix, and so on, these networks are now getting strained, and they're going through another uptick in replacement of some of the fiber and some of the fiber gear. Oclaro sells transmitters and multiplexers that are used in fiber. Okay, so this is a very interesting industry because the demand is really ramping up. We own Oclaro. Oclaro's doubled in the last 6 months and has just recently broken out again technically. It's only trading at 13 times next year's earnings. So it's not like it's 50 times or 60 times. It's 22 times current earnings. So we own the stock. We don't try and pick tops and things. We follow them along with stop losses, and we'll stay in the positions as long as they work. And in a bull market, that really is valuable.
We're going to be back with David Burrows of Barometer Capital Management. He's taking your questions on North American large caps. Give him a call, 1-855-326-6266.